Alrighty, everybody. Welcome to the breakdown with Birkenhoff or the breakdown with WB, depending where you are listening to this stream from. The breakdown with Birkenhoff is my YouTube channel, and the breakdown with WB is my DLive, Trovo, and Twitch accounts. Today's going to be a real interesting stream, but before we get into the nice big details of that, I want to mention a few things before we get started and make sure that all of our platforms are live and ready to go and everything when it comes to those parts and components. First thing I want to mention is make sure you are following the freedomscoop.com. The site is going over a makeover now, so it's not live really as of yet, but it's going through some updates and is going to be a much more interesting website and give you your information and everything in a much better way. And if you're wondering, well, what is the freedomscoop.com? The freedomscoop.com is a group of individual content creators such as the Generational Gap, J. Edgar with his shows really, Stephen and Garamus, Freckles and Brit show, and the R-rated conservative, and we're all just individual content creators that talk about the news or anything in culture or anything we think needs to be kind of talked about or we might need to give our opinions over. And they all have shows, and J. Edgar and Stephen and Garamus have daily shows where they talk about the news and everything. Now to give a few quick shout outs about my stuff. On the breakdown with Birkenhoff, I'm going to be doing a series of more individual solo videos as well, depending on how things go with my schoolwork and workloads from week to week. But I am going to be doing my first news episode that I promised at the start of 2021 with what to expect for my content creations for 2021. And so far, that video hasn't exactly gone too much to plan or too well from what I really wanted to do, but I'm starting to get a little bit more of a grasp for my schedule and get into the flow of going back into the semester. So I'm hoping to kind of keep up with that schedule or adapt a little bit of a more accurate schedule when it comes to what I plan to do for my streams. But the reason I mention that is this week I'm going to be doing my first news episode, and basically I'm going to pick a story, one story, two stories, maybe three stories of what is happening throughout this week and give a very short but concise recap of what has happened. And the whole purpose of doing that is to come up with a area where you can tune into through my YouTube channel and at least view one story, maybe two stories, maybe three stories, and get enough information in a short amount of time to where it feels like you at least know one thing, what's going on in the week, or the most important thing that I think is going on throughout this week. So I hope to be doing that and have that out this week, probably either Thursday or Friday, depending on how everything goes. But just for anybody who may be stumbling on and wondering about the purpose of my streams or anything like that, basically what I do for my streams is I tackle a certain issue or think about a certain issue kind of live on air. Maybe I'm educating myself a little bit more. Maybe I'm picking a subject I know something about but want to know more about. Basically, I view articles or read articles. I give my opinion on things, and I try to find research to back it up on issues that I don't necessarily know or I'm kind of educating myself on. So the whole purpose is to kind of learn live on air, read your comments, answer your questions, and do things like that. And for today's episode, and what I wanted to talk about was with Bitcoin and DOGECOIN. And both of these software programs, well, not really software programs, but both of these alternative currencies, if you want to call them, are well, they're alternative currency, but Bitcoin is probably the most popular type of alternative currency we have heard so far, or at least is the most popular by any sort of standard out there. And so we're going to be first talking about Bitcoin. And really, I'm just going to learn what Bitcoin is and if it's kind of practical for at least a major worldwide sense of practical more than just an individual sense. But basically, I'm going to be educating myself on that, because in no way am I an expert in Bitcoin or an expert in finance or an expert in alternative currency or an expert in blah, 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 blah. I don't really know very much about Bitcoin, and that's kind of the purpose on why I'm doing a stream about it, to learn once again live on air. So before I just keep blabbering on and make no sense, we'll get into the actual topic at hand with Bitcoin itself. So just like anything, when it comes to whatever topic I'm trying to cover, if there's something that's more direct in coverage, like when you talk about justice reform or police reform, there isn't necessarily one particular site or one particular issue you can go on to know the exact details over police reform or criminal justice reform or anything like that. But when you're talking about a specific thing that has its own website or has its own sort of concern or own sort of whatever you want to call it, I'm going to go straight to the source. And in this case, it is Bitcoin directly. So this is Bitcoin's website. And we're going to be reading about how Bitcoin kind of defines itself and how Bitcoin kind of works. So I'm just going to be reading directly from the source itself here. The basics for new users. As a new user, you can get started on Bitcoin without understanding the technical details. Once you install the Bitcoin wallet on your computer or mobile phone, it will generate your first Bitcoin address, and you can create more whenever you need one. You can disclose your address to your friends so that they can pay you, or vice versa. In fact, this is pretty similar to how email works, except that Bitcoin addresses should only be used once. Bitcoin's kind of basic technology and how people feel like it's maybe a safer form of currency, or at least you could trust it because it is digitally based. So you would want to make sure that you would be able to trust this currency as well. So when it relates to that, we are going to be looking at Bitcoin's basis in blockchain, and blockchain is a type of, I guess you could call it software or security feature that allows it to be more safer compared to maybe some alternative types of safety features out there. So we're going to be looking and reading directly about what Bitcoin says about blockchain. The blockchain is a shared public ledger on which the entire Bitcoin network relies. All confirmed transactions are included in the blockchain. It allows Bitcoin wallets to calculate their sustainable balances so that new transactions can be verified, thereby ensuring that they are actually owned by the spender. The integrity and the chronological order of the blockchain are enforced with cryptography. I hope I said that right. Transactions through private keys. A transaction is a transfer of value between Bitcoin wallets that gets included in the blockchain. Bitcoin wallets keep a secret piece of data called a private key, or SEED, or seed, which is used to sign transactions, proving a mathematical proof that they have come from the owner of the wallet. The signature also prevents the transaction from being altered by anyone once it has been issued. All transactions are broadcasted to the network and usually begin to be confirmed within 10 to 20 minutes. And this is through the processing of mining, which we are also going to be reading a little bit about here when understanding the technology of Bitcoin and how it works, or people might value the Bitcoin price to be a little bit better. Mining is distributed consistent system that is used to confirm pending transactions by including them in blockchain, and it forces a chronological order in the blockchain, protects the neutrality of the network, and allows different computers to agree on the state of the system. To be confirmed, transactions must be backed in a block that fits very strict cryptographic rules that will be valued by the network. These rules prevent previous blocks from being modified because doing so would invalidate all subsequent blocks. Mining also creates a competitive lottery that prevents any individual from easily adding new blocks consecutively to blockchain. In this way, no group or individual can control what is included in the blockchain or replace parts of the blockchain to roll back to their own speeds. So now we've learned a little bit about directly from their website here. Sorry about that. We'll continue on here. Just want to make sure we are live to go. It looked like we lost connection there a little bit, but it looks like we are back up on all the platforms here. So I'll continue on. Just want to make sure we were still live and not talking to nobody. But we'll continue on with our next website here, where it's talking about the Bitcoin and what it ultimately is, but from a alternative website than Bitcoin itself. Because obviously, when you talk about an issue or a topic like Bitcoin, using the actual website itself is maybe going to get you a targeted viewpoint, because they are going to want you to go away thinking that Bitcoin is something you want, Bitcoin is something that's good, this is why you should trust it, because Bitcoin is the product itself. They want you to obviously purchase it because that is how they are going to be able to get their money and be able to sustain themselves as a business. So it's important that we don't just take what Bitcoin directly says on their website itself, but rather research other sites and what people kind of think about Bitcoin. But one of the major things when it comes to these alternative currencies that aren't exactly backed up by Wall Street, or aren't backed up by the major players of how the U.S. economy works, or the world economy works for that matter, is it ultimately, for it to become a real version of currency, or to become a widely known currency or a widely used currency, it would have to be accepted by the mainstream people and the mainstream players that have this big hand and big power of how the economy circles and how the economy is used. So until that ultimately happens, Bitcoin is one of these fringe type of investments. And some people have made huge money off of their Bitcoin purchases, and when they bought in when it was at a much lower value. Purchasing one Bitcoin is a significant amount of money. I believe the last time I looked, it was about $35,000 for just one Bitcoin. We'll look live on air to see what the Bitcoin cost is now as we are speaking. So right now, one Bitcoin is $44,227.90, and that is US dollars. So to purchase just one Bitcoin, you would need 44,227 American dollars. So that is what we are talking about here when we are talking about Bitcoin. So the idea that just this one virtual currency or alternative currency, if you think about it like coins and for the US currency, just to have one of those is at a significant cost for the exchange rate of actual, you could call it actual American currency if you want to think of it that way. So it's just something to kind of note. It's something I wanted to kind of state off at the beginning of this episode here before we start kind of getting into some major details about it and getting into some videos to try to explain what exactly is at hand and what is working when we talk about Bitcoin and the technology and why people might trust it and why people might not trust it, or whatever you kind of want to say from those points. So this is from Investopedia, and as I always say, but I want to make sure everybody knows who may be watching now or later, all of these articles are linked in my YouTube description at the breakdown with Birkenau for this video, or you can find it by joining my Discord server, and it's under the Stream Articles tab. Excuse me. It's under the Stream Article tabs for my Discord in case you find an article interesting or you want to read the article yourself. So what exactly is Bitcoin? According to Investopedia, Bitcoin is a digital currency that was created in January 2009. It follows the idea set out in a white paper by the mysterious the identity of this person or persons who created the technology is still a mystery. Bitcoin offers the promise of lower transaction fees than traditional online payment mechanisms, and unlike government-issued currencies, it is operated by a decentralized authority. So that's one of the things that makes people interested about these alternative currencies. Because as I just mentioned earlier, before Bitcoin becomes, you could call it mainstream, they would ultimately, for a lot of people, have to be accepted by the mainstream. But one of the bad things about that is the factor that that's partly why Bitcoin is so popular, or partly why people want to purchase Bitcoins or get into the investment of these alternative currencies, is because they are not backed by these major mainstream players. So if the currency were to die off, this currency being the regular United States dollar, they could be having to go to alternatives. And if they don't go to gold or silver as a physical alternative, you could see in the digital age that a alternative currency like a Bitcoin could become popular enough to be used in the mainstream usage of the money. So that's part of the appeal, you could say, to why people want to purchase Bitcoin or get involved in these Bitcoin purchases, is the fact that it isn't necessarily accepted fully within the mainstream players of economics, or whatever you ultimately want to call that. So there is kind of a little bit of a double-edged sword when it comes to Bitcoin based off of those needs as well. Bitcoin is a type of cryptocurrency. There are no physical Bitcoins, only balances kept on the public ledger that everyone has transparent access to. All Bitcoin transactions are verified by massive amounts of computing power. Bitcoins are not issued or backed by any banks or governments, nor any individual Bitcoin values as a commodity. Despite it not being legally tendered, Bitcoin is very popular and has triggered the launch of hundreds of other cryptocurrencies, collectively referred to as altcoins. Bitcoin is commonly abbreviated as BTC, and they have some videos of Bitcoin explaining it on Investopedia, but we have a little bit later a video that I thought was a little bit more interesting and more detailed about it. So in order to understand kind of the appeal behind something like Bitcoin, you have to kind of understand why people might be interested in ultimately using Bitcoin as they said, an altcoin or an alternative version of currency. And it is something that is very interesting when it comes to those points and to those values, because depending on who you ask, you might get different answers about it. So I also think that that is a rather interesting thing itself. But let's read what Investopedia says is kind of behind some of this interest. The Bitcoin system is a collection of computers, also referred to as nodes or miners, that all run Bitcoin's code and store its blockchain. A blockchain can be thought of as a collection of blocks, and each block is a collection of transactions. Because all the computers running the blockchain has had the same list of blocks and transactions, and can transparently see these new blocks being filled with the new Bitcoin transactions, no one can cheat the system. So that is an appeal also to these alternative currencies. Because let's put it this way. When you want to make an investment in something and you want their investment to be currency based, so you want return on whatever you invest. I mean, when you invest in anything, such as, even like training courses for work, you're investing something when you go to that training course. In that case, you're investing your time. But in this case, when you're talking about stocks, or you're talking about Wall Street, or you're talking about anything to do with money, you're investing your money and you're hoping to have a return based off of getting more money back, or at least maintaining that amount of money you put in. In other words, not taking a loss. But when you bring it back to like the work example, which doesn't ultimately relate to this, but it just gives you another example to kind of put in perspective. When you go to a work training module, you're investing your time, and you hope out of giving your time that you have more knowledge and you will be able to perform at your job better, and maybe that you could even lead to getting more money through a raise at your job through your performance. So you could kind of think of it that way. But the reason I bring that up is in order to invest in these alternative currencies and to hope to get a greater investment back, people have to view these currencies or view this perspective in a light. And in the particular case of Bitcoin and a lot of these other alternative currencies, but we'll just talk about Bitcoin to make the example a little easier, it is because of this blockchain technology. Because blockchain is very promising because it is a lot harder to hack and a lot harder to break through. So although you're investing in an alternative currency, you still feel safe enough to do so because it is backed up by this major security that is harder to break through than anything else. Because especially if you talk about a digitally based currency, you would have to be careful that this currency is backed up and can be trusted. And blockchain is what Bitcoin uses to hopefully build up that trust that people can invest in using their US dollars to invest in this alternative currency to get a greater return back on your Bitcoins because it's safe enough to do so. And we're going to get into the blockchain technology a little bit later in today's episode, because depending on who you ask, depending on what you look at, some people are a little bit skeptical about the actual practicality of blockchain and how safe it really is. But in an event an attack was to happen, the Bitcoin miners, the people who take part in the Bitcoin network with their computer, would likely fork to a new blockchain, making the effort the bad actor put forth to achieve the attack a waste. Balances of Bitcoin tokens are kept using public and private keys, which are long strings of numbers and letters linked through the mathematical encryption algorithm that was used to create them. The public key serves as the address which is published to the ward and to which others may send Bitcoins. The private key is meant to be guarded secret and only used to authorize Bitcoin transactions. Bitcoin keys should not be confused with a Bitcoin wallet, which is a physical or digital device that facilitates the trading of Bitcoin and allows users to track ownership of coins. The term wallet is a bit misleading, as Bitcoin's decentralized nature means that it is never stored in a wallet, but rather decentrally on a blockchain. So again, that briefly hints at another reason to why people might want to invest in Bitcoin as well, is because it's not all stored in one particular case like you might have for cash itself through the storage of an actual physical bank that could be robbed or could be stolen or whatever case you want it to be. So because the very nature of Bitcoin is more spaced out, more digitally encrypted, more harder to get to, your money might actually be more safe through the digital base of Bitcoin rather than actual physical storage of actual USD dollars. but there's some reasons to also be skeptical about that claim as well. Bitcoin is one of the first digital currencies to use peer-to-peer technology to facilitate instant payments. The independent individuals and companies who own the governing computing power and participate in the Bitcoin network, Bitcoin miners, are in charge of processing the transactions on blockchain and are motivated by rewards and transaction fees paid in Bitcoin. These miners can be thought of as decentralized authority enforcing the credibility of the Bitcoin network. New Bitcoin is released to the miners at a fixed but periodically declining rate. There are only 21 million Bitcoin that can be mined in a total. As of January 30th, 2021, there are approximately 18,614,806 Bitcoin in existence and 385,191 Bitcoin left to be mined. In this way, Bitcoin, other cryptocurrencies operate different from fiat currency. In the centralized banking systems, currency is released at a rate matching the growth in the goods. The system is intended to maintain price sustainability. A decentralized system like Bitcoin sets the release rate ahead of the time and according to the algorithm. Bitcoin mining. Bitcoin mining is the process by which Bitcoins are released into circulation. Generally, mining recurs to solving of cumulatively different puzzles in order to discover a new block, which is added to the blockchain. Bitcoin mining adds a variety of transaction records across the network. For adding blocks to the blockchain, miners are rewarded with a few Bitcoins. The reward is halved every 210,000 blocks. The block reward was 50 new Bitcoins in 2009. In May 11, 2020, the third halving occurred, bringing the reward for each block discovery down to 6.25 Bitcoins. So as we just read there, I'm not exactly sure what all of that means because I am relatively new to Bitcoin. And once again, this is why I'm doing a stream on it, because I do not know that much actual information about Bitcoin and more just what I kind of heard from people. So I don't really know exactly how Bitcoin mining works particularly, but we're going to read a little bit more articles about the Bitcoin mining process and just how this technology might actually work. So we'll go to our next article here about Bitcoin. So this is by BBC, and it states here in their headline, "What is Bitcoin and how does it work?" Okay. Okay, we good. Elon Musk has told users of an online social media app. What is that doing? One second here. Sorry about that. My monitor decided to do something weird. Anyway, Elon Musk has told users of an online social media app that he thinks the virtual currency Bitcoin is a good thing. His comments resulted in the value of Bitcoin rising significantly. So much so that a singular Bitcoin went from the worth of 3,600 euros in March last year to more than 27,000 euros now. And as we just heard and talked about a little bit earlier, the one Bitcoin price now equals to $44,227.90 of American currency. So that value has gone up even more from when this article was written in the 5th of February 2021. Well, that's weird. It is the 8th of February, so the value of Bitcoin is continuously going up and down because this article was written on the 5th of February, and it is the 8th of February when I am doing this, and the price has gone up even more from that 27,000, unless if the euro's price is different. Just out of curiosity, I'm going to look that up. $27,000. Oops. $1,000 in euros. In euro to USD. $2. Oh, shoot. I messed it up. God. Sorry about that. Let's try it again. $27,000 euro to USD. 32,000. Okay. So when this article was written, the value of Bitcoin was at 32,533, and now the value of Bitcoin is at $44,227. So we have seen a drastic increase in the Bitcoin price after this article was written, and after Elon Musk went out and kind of improved Bitcoin off of himself. Bitcoin, often described as cryptocurrency, is a virtual currency or digital currency. It is a type of money that is completely virtual. Well, that's what that means. So anyway, it's like an online version of cash. You can use it to buy products and services, but not many shops accept Bitcoin yet, and some countries have banned it altogether. However, some companies are beginning to buy into its growing influence. In October last year, for example, the online payment service PayPal announced that it would be allowing its customers to buy and sell Bitcoin. The physical Bitcoins you could see in photos are a novelty that would be worthless without the private codes printed inside of them. Each Bitcoin is basically a computer file which is stored as a digital wallet app on a smartphone or computer. People can send Bitcoins or part of one to your digital wallet, and you can send Bitcoins to other people. Every single transaction is recorded in a public list and called the blockchain. This makes it possible to trace the history of Bitcoins to stop people from spending coins they do not own, making copies or undoing transactions. But we know that people can get Bitcoins through buying, selling, or creating their own. So how are Bitcoins created? In order for a Bitcoin system to work, people can make their own computer process transactions for everybody. The computers are made to work out incredibly difficult sums. Occasionally, they are rewarded with a Bitcoin for the owner to keep. People set up powerful computers just to try to get Bitcoins. This is called mining. But the sums are becoming more and more difficult to stop too many Bitcoins being generated. If you started mining now, it would be many years before you got a single Bitcoin. You could end up spending more money on electricity for your computer than the Bitcoin would be worth. So how are Bitcoins valuable, you might be wondering? There are lots of things other than money which we consider valuable, like gold and diamonds. The Aztecs used cocoa beans as money. Bitcoins are valuable because people are willing to exchange them for real goods and services and even cash. Why do people want Bitcoins? Some people like the fact that Bitcoin is not controlled by the government or banks. People can spend their Bitcoins fairly anonymously. Although all transactions are recorded, nobody would know which account number was yours unless you told them. In an online chat with social media users in January 2021, the world's richest man, Elon Musk, said he was a big supporter of Bitcoin. He even went as far as to change his Twitter bio to hashtag Bitcoin. He was repeatedly shown his support on the online currencies in recent years and caused major movements in the values due to his own personal wealth and influence. So is it secure then? Every transaction is recorded publicly, so it's very difficult to copy Bitcoins. Make even ones or spend ones you don't do. It is possible to lose your Bitcoin wallet or delete your Bitcoins and lose them forever. There has also been thefts on the website to let you store your Bitcoins remotely. The value of Bitcoin has gone up and down over the years. It was created in 2009, and some people don't think it's safe to turn your real money into Bitcoins. This concern was expressed by the head of Bank of England, Andrew Bailey, in October 2020. He said that he was very nervous about people using Bitcoin for payments, pointing out that investors should realize its price is extremely volatile. So now we got a good little kind of breakdown by the BBC about the basics of Bitcoin and why people might trust it, why people might use it, and who kind of has backed up Bitcoin here in the future, or who has backed up Bitcoin from a namesake. So we are going to get into our first video here about what Bitcoin is through a simple explanation, and we're going to be skipping around. We're going to be skipping around this video because it is rather long. I don't think we need to sit through all 34 minutes here. But I thought this was a very good video that broke down kind of what Bitcoin is in more detail than just kind of a very basic type of perspective or type of idea.
This is a video guide for beginners about what Bitcoin is and how it works. We will break down Bitcoin into simple concepts together. So by the end of this video, you will understand why Bitcoin was created and the technology behind Bitcoin. I've broken this guide into 7 easy chapters. So feel free to use the time-stamped table of contents in the description area below to hop around this video. Before we get started, please take note of all of my official CryptoCasey accounts listed here on the screen. Many scammers are making impersonation accounts, pretending to be me as well as other crypto content creators. What is Bitcoin? Bitcoin has been a hot topic this year and will likely remain a hot topic into the future due to reasons that will become clear throughout this video. What's interesting is when you Google search what is Bitcoin, you get answers like, Bitcoin is a cryptocurrency. Okay, great, so what is a cryptocurrency? Or another answer you get is, Bitcoin is a digital currency. Okay, well I can access and transfer my US dollars online, isn't that pretty much like digital currency? Or this answer is my favorite. Bitcoin is the first decentralized, open-source, peer-to-peer network that is powered by its users with no central authority or middleman using blockchain technology. Awesome. That tells most people absolutely nothing. Bitcoin may seem like a difficult concept to wrap your head around, yet it's actually way simpler than most people think when we describe it using analogies. So first, let's think about how easy it is to shake another person's hand, give them a high five, or interact with them physically. As long as you're within an arm's length of the other person, it's easy to simply reach out and shake their hand. Or imagine if you had a bottle of water in front of you, how easy it is to simply reach out and have a drink of water. Pretty straightforward, right? Now let's imagine that in order to shake someone's hand, you had to shake another person's hand, who then shook that person's hand for you. Or imagine that in order to have a drink of water from a bottle right in front of you, another person had to pick it up, put the water in their mouth, and then put it in your mouth. That's just crazy, right? Well, that's essentially how banks, credit cards, and our traditional financial system currently works. When you swipe your bank card to pay for groceries at the store, your bank is taking your money from your account and giving it to the grocery store for you and then charging you for it. This is the case with checks, credit cards, debit cards, ACH transfers, and any exchange of money, really. It's so ingrained in our society and the way that we think about money that it seems completely normal and okay for the most part. The reality is the only person who has anything to gain in this arrangement is not even a person really, it's the banks. They make a profit from storing, transferring, controlling, and issuing loans off of money you deposit into banks, under the guise that 1, it's safer there, which is not the case, and 2, you aren't smart or qualified enough to manage your own wealth without their services. So this case of someone basically profiting from shaking a person's hand for you that you could just as easily shake directly yourself is how our modern financial system works.
So I thought that was a very good explanation of why some people will trust a alternative currency like Bitcoin for this example, because it does make a lot of sense on what she was saying about that simply your bank acts as a third party kind of perspective or a transport to your money, and because they do have to transport your money directly and you don't just hand your money directly to the first store that you were there, you get paid an extra fee because the bank is the one that is making this transfer, so to speak. She explained it a lot better than that. It's rather interesting as well. But we're going to skip along to our video here. In the next part, I wanted to kind of share. We'll go here. That's weird. Okay, it looks like we're back up. That is very weird. Alright, well, let's continue.
Chapter 2. Who created Bitcoin and why? At the time of this video, the creator of Bitcoin is our very own modern-day Shakespeare mystery, as the only thing we know about this person or persons is their pseudonym, Satoshi Nakamoto. The true identity of this person or group of people has remained anonymous. Satoshi Nakamoto created Bitcoin and the Bitcoin network using blockchain technology. And blockchain is simply a method of record keeping using math and computer science as opposed to accountants and bookkeepers. What most people don't know is the concept of blockchain was actually outlined back in 1991, and Satoshi was the first one to apply blockchain use just under 20 years later in 2009 with Bitcoin. We will talk about how the Bitcoin blockchain works in more detail in Chapter 3 of this video guide. So why did Satoshi create Bitcoin? In the following section, we will point out the problems with our financial institutions and our current monetary system that prompted Satoshi to create Bitcoin.
As we wait for this ad to play out here. So it's rather interesting, the pure creation of it. And she's going to get into the actual ideas about Bitcoin and a little bit more detail on why somebody would want to create something like it. And then we're going to skip ahead a little bit.
Bitcoin was created as a way for people to store and send value around the world, anytime, anywhere, at virtually no cost, without using a financial business or fiat currency. In our current financial system, bank accounts and credit cards are luxuries most people around the world don't qualify for, don't have access to, or simply can't afford. Even if you do have bank accounts and credit cards, they can be frozen, restricted, and closed at any time without warning. And except for each and every holiday known to mankind, most banks only operate 9 to 5 on weekdays. And even if all of your accounts are clear for the moment, the only thing you store in them or use within them are debt repayment instruments. Yes, our hard-earned money stored in bank accounts is just debt repayment instruments created by the government so you can pay debts like credit cards, mortgages, bills, loans, etc. But doesn't this money have inherent value as well? Isn't it backed by something representative of the issuing company's GDP or something similar? Well, let's talk about what all this money in our bank accounts really represent. Money is a bit of an abstract word, and its true definition is a medium of exchange in the form of coins and banknotes, in addition to being assets, property, and resources owned by someone or something. The type of money that is stored in traditional bank accounts is called fiat. And the basic definition of fiat is this. Fiat is a pronouncement, arbitrary decree, or a command given by a person or group of people that have absolute authority to enforce it. So when you combine the word fiat with the word money, the definition of fiat money is a legal form of money issued and backed by the government. And backed by the government means that the government made an arbitrary decree that fiat money, or our US dollar, is to be used in our economy as a medium exchange for goods and services. Essentially, the US government has commanded or told us that fiat US dollars should be used to buy goods and services in our country. If you're not convinced, just check out the simple bulletproof list on Wikipedia explaining fiat. Any money declared by government to be legal tender, state-issued money which is neither convertible by law to any other thing, nor fixed in value in terms of any objective standard, intrinsically valueless money used as money because of government decree, an intrinsically useless object that serves as a medium of exchange. So all of the money or US dollars we have in our bank accounts is intrinsically useless, valueless, and is only a form of debt repayment or medium of exchange. Satoshi knew this and created Bitcoin to mitigate the following. 1. Banks, credit cards, and other financial instruments are not widely available. Chapter 4. How Bitcoin works. So the Bitcoin blockchain is basically a live running ledger of.
With Fundrise, the same kind of real estate investments that have powered the world's strongest portfolios for decades are now available to you.
All the Bitcoin transactions. The structure of the Bitcoin blockchain is a network of computers around the world with Bitcoin software installed on them. Each time a Bitcoin transaction occurs, the data is transferred throughout the network of computers. Computers that maintain the blockchain networks are commonly referred to as nodes. And these computers, or nodes, validate transactions, add the transactions to their copy of the ledger, and then broadcast the ledger changes to all of the other computers on the network in the form of a block. Each block of transactions has a programmed maximum amount of data it can store. So on average, every 10 minutes or so, a new block of Bitcoin transactions is created, validated, and published to the Bitcoin blockchain. So who are all these people with Bitcoin software installed on their computers around the world validating transactions, and why would they want to do this? Well, Bitcoin transactions are verified and broadcasted to the network via a process called mining, and this process is completed by miners. Miners are these people or pools of people that use computers with Bitcoin software installed on them to maintain the Bitcoin blockchain. Maintaining the blockchain involves keeping the Bitcoin transaction ledger clean, consistent, and permanent by grouping new transactions into blocks and publishing them to the rest of the network for verification. So for a new block to be accepted by the network, miners compete with each other using computing power to verify transactions in exchange for rewards. These rewards are in place to incentivize miners to participate in the mining process to ensure the Bitcoin network continues to be audited and essentially maintained. The technical details of mining are complex, so I break it down in another video guide all about mining. So without losing sight of this video, the basic concept you need to understand about Bitcoin mining is that miners are rewarded with Bitcoin each time they verify a new block of transactions. And mining rewards are a combination of newly minted Bitcoin and investing in Bitcoin. So what determines the price of Bitcoin? The simplest answer.
I want to share the number one reason why you may have lost money with cryptocurrency. Now, I don't know what I'm doing with the light.
Answer is supply and demand. As demand for Bitcoin increases and the supply decreases, it causes the price of Bitcoin to rise. Okay, nice, but why would people want or demand Bitcoin in the first place? Why would anyone want to trade their valueless fiat debt repayment instrument for magic internet nerd money? Well, since the coronavirus pandemic, a lot of people have lost faith in the government, stock market, and financial system at large. And since the printing of trillions of US dollars, even cash reserves are a losing proposition, because printing more money is the same thing as trying to cut a pizza into smaller pieces to feed more people. It's not going to end well. And Satoshi revealed his idea for Bitcoin in 2008, in the midst of our last financial crisis, and launched it the following year in 2009. So Bitcoin was actually designed to be a hedge against our current financial system. Bitcoin was born during a crisis and was built to survive crises. It's been around for over a decade now, and for the first time ever, we are seeing Bitcoin decouple from the traditional stock markets and prove itself as a safe haven in times of uncertainty. In the past, Bitcoin and the cryptocurrency market's performance typically correlated with the stock market. However, in recent months, we are now seeing the stock market open and close at a loss, while the crypto markets increase. This inverse movement reveals that cryptocurrency is separating or decoupling from traditional financial assets and becoming more distinguished as a different type of financial asset, one that people are just starting to flock to during times of uncertainty, transforming their fiat into something they believe will retain its value over time and almost certainly increase substantially over time. As we discussed previously, programmed halving events decrease the supply of new Bitcoin entering into circulation. and the price of Bitcoin increases when the supply decreases and demand increases. So the new supply of Bitcoin decreased by 50%, and demand for Bitcoin during these uncertain times is increasing. If you look at the historical data of the price of Bitcoin following previous halving events, you will see the price increasing nearly tenfold several months after the halving takes place. After the first halving in 2012, Bitcoin went from around $10 per Bitcoin to over $1,000 per Bitcoin. After the second halving in 2016, Bitcoin went from $1,000 up to $20,000 and settled back down to $10,000 per Bitcoin. The third halving happened in mid-May of 2020. So, is $100,000 per Bitcoin in the cards in the coming years? Is $1 million per Bitcoin possible in the future? Well, if you reference data from past halving events, which occurred during the longest traditional market bull run in history, and consider the most recent halving event happened during one of the worst global financial crises we've ever experienced, anything is possible in crypto. From $0 per Bitcoin to over $1 million per Bitcoin in the future. And Bitcoin is proving to be one of the only sources of value we have the opportunity to invest in where we can experience our wealth exponentially increasing over time. In this guide, we walk through the process together step by step, making it as easy and as simple as possible and ensuring everything is set up safely and correctly. Or if you would like to start buying now, scroll down to the description area below and click on the links to safely access my list of recommended exchanges you may like to use and that support your specific country of residence.
Alrighty, so I thought that video through scooping around a little bit kind of demonstrated what we were wanting to talk about when it comes to Bitcoin. But one of the major things about Bitcoin and part of the security that people feel with it or potential safety or whatnot is with blockchain. And in order to understand blockchain, I have a article about it and a couple of articles and a video talking about what blockchain is. Blockchain, which began to emerge as a real-world tech option in 2016 and 2017, is posed to change the IT in much the way as an open-source software did a quarter of a century ago. In the same way, Linux took more than a decade to become a cornerstone in modern application development. Blockchain will likely take years to become a lower cost, a more efficient way to share information. Based on peer-to-peer technology, blockchain is distributed ledger technology DLT that allows data to be stored globally on thousands of servers while letting anyone on the network in real time. That makes it difficult for one user to gain the system. So we'll listen to an article kind of about blockchain here. Or listen to a video, if I could speak.
Deal with online wallets, banks, and third-party applications? Well, it's possible thanks to blockchain. Here's everything you need to know about blockchain. Imagine 4 friends, Jack, Ted, Sam, and Phil, meet up for dinner. After they're done, Jack pays the bill, and all of them decide to split the expense amongst each other. Now, on the next day, when Phil sends his share to Jack via online money transfer, the transaction goes through without a hitch. Then, Ted and Sam send their respective shares to Jack, but their transactions don't go through. The failed transaction cites some issues at the bank. That's when Jack comes to know about the many ways a bank transaction could fail. It could be due to technical issues at the bank, one of their accounts were hacked, daily transfer limits being exceeded, and sometimes additional charges, like transfer charges, associated with transferring money. To solve these problems, the concept of cryptocurrency came into existence. Cryptocurrencies are a form of digital or virtual currency that run on a technology known as blockchain. Thanks to blockchain, cryptocurrencies are immune to counterfeiting, don't require a central authority, and are protected by strong and complex encryption algorithm.
So right there's a good graphic towards what Bitcoin is and blockchain, and why people ultimately feel safer with blockchain because of those reasons ultimately displayed in front of you right now. And I think the most appealing is that it doesn't require a central authority in a time where the US dollar is becoming less and less valuable as it keeps getting printed more and more without a necessary economy to sustain its value.
And in a market of more than thousands of cryptocurrencies like Litecoin, Ethereum, Zcash, and so on, one reigns supreme: Bitcoin. Now, let's go back to our previous example and have Phil, Ted, and Sam send Jack 2 Bitcoins each as their contribution to the previous night's dinner. Let's assume Phil, Ted, and Sam have 3 Bitcoins in reserve, while Jack has 5. First, Phil sends 2 Bitcoins to Jack. A record is created in the form of a block. The transaction details between them is permanently inscribed in this block. This record also holds the number of Bitcoins each of the friends own. So, after Phil's transaction, Jack has 7 Bitcoins, while Phil has 1. Following this, Sam and Ted send 2 Bitcoins to Jack. A new block is created for each of these transactions. These blocks hold the transaction details as well as how many Bitcoins Sam, Ted, and Jack have in reserve. These blocks are linked to each other, as each of them takes reference from the previous one for the number of Bitcoins each friend owns. This chain of records, or blocks, is called a ledger, and this ledger is shared among all the friends, which acts as a public distributed ledger. This forms the basis of blockchain. So, what happens when Phil has only 1 Bitcoin left, and he tries to send 2 more Bitcoins to Jack? The transaction will not go through. This is because all his friends have copies of the ledger, and it's clear that Phil has only 1 Bitcoin left. His friends will flag this transaction as invalid. A hacker will not be able to alter the data in the blockchain because each user has a copy of the ledger. The data within the blocks are encrypted by complex algorithms. All of this is made possible with the help of blockchain technology. Blockchain can be described as a collection of records linked with each other, strongly resistant to alteration, and protected using cryptography. Now, let's have a closer look at the Bitcoin transaction between Jack and Phil and find out how it works. Every user in the Bitcoin network has 2 keys: a public key and a private key. The public key is an address that everyone in the network knows of, like an email address of a user. The private key is a unique address that only the user has knowledge of, something like a password. First, Phil passes the number of Bitcoins he wants to send to Jack, along with his and Jack's unique wallet address through a hashing algorithm. All of this is part of the transaction details. These details are encrypted using encryption algorithms and using Phil's unique private key. This is done to digitally sign the transaction and to indicate that the transactions came from Phil. This output is now transmitted across the world using Jack's public key. With this, the message or transaction can be decrypted only by Jack's private key, which only Jack has knowledge of. Different cryptocurrencies use different hashing algorithms. While Bitcoin uses the SHA-256 algorithm, Ethereum, which is also a famous cryptocurrency, uses one known as Ethash. This transaction and several other similar ones are taking place all around the world. These transactions are validated and then added block by block. The people who validate these blocks are called miners. For a block to be validated and added to a blockchain, miners need to solve a complex mathematical problem. The miner who solves this first adds the block to the blockchain and is rewarded with 12.5 Bitcoins. The process of solving the complex mathematical problem is called proof of work, and the process of adding a block to the blockchain is called mining. With this, Phil and Jack's wallets are updated, just like every person in the network who has completed a transaction. Now that you know about blockchain and its important concepts, time for a small quiz. What is the concept of blockchain that ensures data cannot be altered by any of the users?
We don't need a quiz. I'm going to pull up the stream here on YouTube just in case for some reason my monitor never wants to pull up YouTube. So we'll wait for this to load. Just to make sure I'm not missing anybody's comments. Excuse me. Make sure I'm not missing anybody's comments there. Come on. Okay, I don't see anybody here on YouTube, so we'll continue on. Just wanted to make sure that all of that was good to go, because I noticed that it wasn't wanting to pull up on there, so don't know why that is, but it never really wants to work. But we'll continue on with our next bit of evidence talking about this. Oh, thank you for the follow, the amazing Wolf Skeptic. I highly appreciate that. Hopefully the sound alert popped up on your side. Sometimes it doesn't want to do it because it's nice and stubborn. So anyway, hopefully if you're still here, thank you for the follow. I highly appreciate that. And do you have any Bitcoin or any alternative currency yourself? I don't. I'm more just kind of curious about it because I don't really know that much about it, and that's why I'm kind of doing the stream today. I'm definitely not an expert in Bitcoin or an expert in any sort of finance out there. So can't really ask too much of my personal opinion with Bitcoin because I don't really have any. But it is very interesting. And these alternative currencies are also kind of interesting as well. Well, one of the biggest core standards of Bitcoin in particular is with blockchain, and it was usually known as being a pretty sustainable currency, or not necessarily currency, but a blockchain made it to where a lot of people thought it would be very hard to hack into or to make it unsecure. But as it turns out, there is potentially some cases where blockchain has been hacked before. Early last month, the security team at a Coinbase noticed something strange going on. One of the cryptocurrencies people can buy and sell using Coinbase's popular exchange platform, its blockchain, the history of all its transactions was under attack. An attacker had somehow gained control of more than half of the network's computing power and was using it to rewrite the transaction history that made it possible to spend the same cryptocurrency more than once, known as double spends. The attacker was spotted pulling this off to the tune of 1.1 million. Coinbase claims that no currency was actually stolen from any of its accounts, but its second popular exchange, Gate.io, has attempted it wasn't so lucky, losing around 200,000 to the attacker, who strangely returned half of it days later. Just a year ago, the nightmare scenario was more theoretical, but the so-called 51% attack against Ethereum Classics was just the latest series of recent attacks on blockchains that have heightened the stakes for the industry. In total, hackers have stolen nearly $2 billion worth of cryptocurrency. I'm going to have to turn that off the next time. I thought I did turn it off. Sorry for all those notifications there. We wouldn't be surprised blockchain are particularly attracted to thieves because fraudulent transactions can be reversed, as they often can be in the traditional financial system. Besides that, we have known that just as blockchains have unique security features, they have unique vulnerabilities. Marketing slogans and headlines that call the technology unhackable were dead wrong. That's been understood, at least in theory, since Bitcoin emerged a decade ago. We're going to change that. So there's some ways to hack Bitcoin and the blockchain technology. Not too surprising, but it is a little bit surprising when it comes to that kind of factor behind blockchain and everything like that. So you might be thinking, should we trust the blockchain technology here? And that would be a very good question to have from the information that blockchain has been ultimately hacked before. Okay, I think I'm going to end the stream for today. I had something come up here. I want to make sure we get this turned in time for class, just to make sure. If not, I'll come back here just in a little bit if it turns out that I'm mistaken. But I definitely don't want to be late on this particular assignment. So I'll continue this and a little bit later if I am wrong, but I'm sorry about that, but I'm going to go ahead and end it for today. Thank you, that amazing Wolf Skeptic, for the follow. I appreciate that, and I'll be doing some more streams throughout this week and the upcoming times and all of that, so you can definitely be looking forward to those if you kind of like my research-based content.